Hi everyone, this is the second video of the day. Thank you for watching, thank you for listening. Of course, another beautiful day here in the sunny side of Western Massachusetts. But what I want to do is I want to do a real quick video here and talk about something I believe is very important. Now I'm going to talk about a little bit about history, particularly the 1920s before that, and try to equate that to what is going on today. Now, before 1920, people never really invested in the stock market. It wasn't a very popular thing to do. It was only popular among the oligarchs, the financial elite, to put money in the stock market. It was never anything intended for the average Joe or the average Jane. And all of a sudden, the Wall Streeters got this idea. And I believe I might be wrong on this, but I believe it was Edward Bernays that they had hired. They hired Edward Bernays or somebody, a famous propagandist, to go out and sell the stock market. They told the average Joe, look, you want to invest in the stock market. This is a place you can trust. You invest with us, we're going to turn $100 into $500 and then later into over $1,000. We're here to help you make money. You can trust in us. And that, of course, was the selling point. That's what got everybody into the stock market. Now, between 1920 and 1929, you had an explosion of wealth. Similar to what's going on now. You had an explosion of wealth. People were spending money left and right, living these lavish lifestyles. Just everything was bigger, everything was badder, everything was just so glamorous. And people who were the average Joe and average Jane were living the oligarch lifestyle. What happened in 1929? Well, of course, the stock market blew up. After a decade of everybody investing in the stock market, tripling, quadrupling it, so everybody, including the shoeshine boy, knew what was going on. They knew what stocks to pick. They knew everything about that particular company they're investing in. And of course, there's a quote out there. And the reason why I mentioned the shoeshine boy is there's a quote somewhere. I forget which individual said this, but he said that when he was getting his shoes shined by a shoeshine boy, and the shoeshine boy knew more about stocks than he did, that he knew it was time to get out of the stock market. Anybody who was anybody invested in the stock market became a very popular thing because the propagandists made people believe that that was the thing to do. If you wanted to be rich, that's what you did. But in 1929, that all blew up. People became extremely poor. I remember in high school it was explained to me that only reason why it exploded is because too many people invested all their eggs in one basket, although that might have been true to a certain extent because people were getting into it for the very first time. Remember, as I've said before, that was something that the elite went into, not the average person. But after 1929, everybody lost their money, people became extremely poor, and the Wall Streeters, the financial elites, got even richer because they got so many people to invest in these stocks. They waited till it got to a certain point, then they dumped all those stocks and left Joe and Jane holding the bag. And really, that's what we're seeing right now. We're seeing that right now. We're seeing the Dow Jones at all-time highs. We're seeing, of course, interest rate all-time low. So, yes, I can go and buy that dream house. Even though in Detroit, it's costing over $800 million to get rid of them, to decompose those houses because those houses are so poorly managed, so badly damaged from neglect that they're just not even livable anymore. They're condemned. But yes, everybody gets to afford a house. Interest rates are only 2.47% for the 10-year Treasury note. Yes, interest rates all-time lows. I can go out and buy that car. I can buy those video games. I can buy. Yes. And of course, after 2001, after 9/11, Bush said, if you're really upset about 9/11, if you're really sad, you're depressed, go out and buy. Consumerism makes you feel good. And that's the message that we saw in 1929 that we're seeing now. The only difference now is we have the world's reserve currency that is being completely bypassed because a few countries are kind of sick of our foreign policies, if you know what I mean. You look at what's going on in Ukraine, you look at what's going on in the Middle East, Russia's fed up with it, China's fed up with it, they're dumping the US dollar, going to other currencies, they've been buying up gold, especially ever since 2010, and of course the United States continues to lose credibility as time goes on, and really what we've been seeing is we've been seeing a slow decline in the U.S. dollar. But now that all these deals are being made between Russia and all these other countries, and also China and all these other countries, we're starting to see that slow decline turn into an avalanche. It's like when you see a sandcastle fall apart. You know, you might see bits and pieces of it sort of fall apart, and the sand would just kind of drip down some sort of slope or whatever, but then something happens, a wave hits it, you know, someone steps on it, and just the sandcastle just gets crushed. And that's what's going on with the U.S. economy. We've been seeing the economy muddle through since 2008, but now we're starting to see there's a wave, there's a tsunami coming, we better run, better run, and that's what all these other countries are saying, we better run. You know, we're not going to be left holding the U.S. dollar when it implodes. And the Federal Reserve just keeps printing. So we see the wave is starting to come. We're seeing someone with a big foot getting ready to stomp on that sandcastle. And, of course, you have the Wall Streeters down there in Wall Street. Oh, we love inflation. Yeah, inflate. Yeah. You know, we want food prices going up. We want everything going up. And people are like, yeah, I'm going to go out and buy a house. You know, the interest rate's all-time low. Yeah, let's do it. And all I'm really getting at is that everybody's getting poorer. But there's this perception out there that everybody's rich. And that's what went on back in the 1920s. You know, there was this perception everybody was getting rich. But what little did those people know, they were actually buying into a Ponzi scheme. I mean, it's sort of like the stock market, and I believe that this is true from ever since its inception. It's all about a Ponzi scheme. The whole stock market, the New York Stock Exchange, all these exchanges are all Ponzi schemes. You go out, you buy into it, and someone's sitting back there in an office, given the fact that we live in a digital world now, are sitting there at their computers. We're getting ready to pull that sell button to make sure you lose all your money and that he gets all his money. And it's a Ponzi scheme. That's what we're living. And just imagine, we all grew up in this world believing that everybody was honest, everybody was good, everybody was fair. You could trust anybody. Well, when you look at the mainstream world out there, you look at Bloomberg and mainstream media, you look at the political elites, and you're led to believe that these people have your interests at heart. No, they really don't. So it's just, again, that's why I feel like it's very important to bring up 1920s and before that. It's very important to kind of equate that to what's going on now, because as Jim Cramer's out there saying, buy stocks, you know, they're getting ready to pull the carpet right underneath you, the rug underneath the table. They're getting ready to take people who have money left, they're ready to take it all away, and the stock market is a vehicle to do so. Nothing wrong with investing in the stock market in general. It's just that the problem with the stock market is that you have a very small group of people managing it. And when you have a small group of people like that managing it without any real oversight, because the government's you know, in on it as well, then you know you're going to get this Ponzi scheme. You're going to get your money stolen when you invest in it. And of course, a lot of companies sort of force you to invest in it. You know, many of you have a 401k. Well, how many of you actually really want to invest in a 401k, but you're sort of forced to? If you don't sign up for it, you're forced to have to pay a certain percentage into it anyway. So the 401k is essentially a tax to sort of to continue to prop up the markets. But thank you for watching. Thank you for listening. Take care. God bless. I'll see you guys tomorrow. Bye.